Hello everyone, today's video is on R&D tax relief. So specifically a consultation which was announced in the budget last week where the government is looking to possibly overhaul the R&D system. Now, I think it's important to say from the offset, the government is very keen to keep the R&D tax relief regime in some way, shape or form. In fact, it's all fits in nicely with the government's strategy for R&D, which is they aim that expenditure and investment in R&D activities will be 2.4% of GDP by 2027. So that's their target. So they're actively encouraging an increase in R&D activity. So this consultation is all about how the tax reliefs, the mechanisms of those reliefs work per se, but actually the government is committed to R&D. It's just which form and how will that be administered. So just an overview of the basic strapline in R&D tax relief is that you need to overcome a scientific or technical uncertainty. That's it. That's what the legislation says. So if you are doing something, some sort of project that overcomes this technical or scientific uncertainty, then the expenditure that you incur should qualify for R&D tax relief. In terms of what is the relief? Well, in the UK we have two schemes. The large scheme and the SME scheme. Now, the SME scheme is the scheme that is used by thousands and thousands of small and medium-sized businesses. Actually, the SME businesses can, it gets a little bit complicated, they can use or choose to do the large company scheme. However, the vast majority don't, and the vast majority of SMEs do use the SME scheme, which was designed for them, and that's what I'll talk a little bit further on. So the SME scheme, remember, is what we call a super deduction. Now, there was a lot of fanfare in the press about the super deduction for capital allowances announced last week, but a super deduction is what we've had under the SME R&D relief scheme for many years. So let's say, take an example, you spend £100,000 on qualifying activities, so you've resolved or endeavouring to resolve a technological uncertainty. You spent £100,000, largely on wage bills, say. Now, you're already getting a tax relief on that because it's in your P&L. So how the R&D SME scheme works is it says, look, we'll assume that you've spent an extra 130% of that expenditure. So instead of £100,000 that you've already spent, we'll assume that you've spent £230,000. And of course, that reduces taxable profits and reduces the corporation tax. So it's important as well to point out this is a corporation tax. It's not available to non-corporates. So, but let's say there's also another strand to the SME scheme is that the so-called claimable tax credit. So let's say you were already breaking even. So you've spent your £100,000 on the qualifying activity and you've broken even for the year. But then you claim this R&D relief, so that will give you an extra 130 grand to knock off your bottom line. But if you're already at zero, that will create a taxable loss of 130,000. And the rules say that you've got a choice. You can either use that loss and you can set it off against future profits. Could even go back and claim against earlier year profits, or you can surrender that loss for cash. So you could say, well, I want to, so let's say you say, well, we don't want to wait to set it off against next year's profits. We'll just take that £100,000 and we'll surrender it for cash. And the surrender rate is 14.5%. So normally, if you'd waited a year, you could have saved 19% corporation tax, or you get 14.5. So in that example, you could either get 19% of 130,000 next year, when hopefully you're making profit, or go to HMRC and say I'll have the cash rebate, which is 14.5%. So it's less from a monetary point of view, but you're getting it that much sooner. So specifically the consultation then that they announced last week, and how the government normally do this, and it's good that they do. They often in tax law, yes, they'll just bring in new law and there's no consultation and they won't tell you that it's coming in. But other times they will consult for many, many months with all sorts of stakeholders, wider tax community, tax advisors, industrialists, people who have a vested interest in the R&D activities in the UK, and they've launched this consultation, and it tends to be in the form of a series of questions. So they'll put down on a paper, on a document, various observations and questions around that, and ask for people's specific responses to those questions. So what did they ask for last week? So basically they wanted to know, do people think that it's complicated having two separate schemes? Should the schemes be consolidated and have one overall scheme? Now, that's a difficult question, because I would say the vast majority of the SME people, businesses who claim the SME scheme, have no idea how the what I call the large scheme works. It's completely different in its mechanism. So, but from HMRC's point of view, they say, well, it can be a bit complicated. The fact we've got two separate schemes to administer, different sets of rules. So they're looking at possibly combining it, and they actually think that the larger scheme, as we call it, from a practical point of view, is the easiest scheme to run. So maybe they will try and merge those two schemes. We will see. So what else have they said? They've said, should the R&D tax relief claims be decoupled from the tax regime? Because at the minute, everything goes through the tax return and corporation tax compliance to claim R&D relief. So HMRC is saying, well, is this the right thing? Because it's firms can claim this under self-assessment, corporation tax self-assessment, where you claim it on the tax return. Should it be something separate? Basically, a more thorough kind of claim is what HMRC are suggesting, that you have to have advanced assurance every time, because at the minute you don't. You can choose to have advanced assurance. Therefore, if you get it, you're not going to have a tax inquiry down the line. Hopefully, that's the comfort that you get from having the R&D claim scrutinised before it goes in. But at the minute, it doesn't have to be. You can just make the claim, and if HMRC inquire, they inquire. So, but they are saying, actually, would it be better from a mechanics point of view to decouple it from the CT regime and have a proper standalone claim and more assurance from the taxpayer? They're also saying about asking how do people think the R&D scheme can be improved to incentivize? Is it a good enough incentive to encourage people to undertake R&D activities? So they're asking about that. They've got a issue with regards to certain advisors out there. A lot of a no-win, no-fee culture has sprung up over R&D tax relief. So businesses, often separate from the firm's accountants or regular tax advisors, do nothing but R&D claims. And they'll say to businesses, look, we'll get you a no-win, no-fee, and we'll take normally a slice of what we save you when we do get you a claim. So HMRC is worried that this is leading to pushing boundaries, could be open to abuse, and the fact that HMRC don't really know the who's been involved in these claims, because what would tend to happen is an outside specialist R&D boutique would do the claim for the company, and then the company would submit it on their tax return, and they may get their regular accountant to do that submission on the corporation tax return. But there's nothing to say on the return who did the calculations behind the scene for the R&D. So the HMRC don't have these particular boutiques on their radar for each individual claim that goes in. So they feel like they're flying blind a bit, and they want more. They want to consult and see if more of these providers somehow become more visible to HMRC, basically. So they're consulting on that. And of course, the other again, coming back to their idea of this perceived abuse, it certainly has been the case when the repayable tax credit has definitely been open to abuse. So you remember I said the Sme Scheme works, where you either have a super deduction, reduces your profit level, but if you're already at break even, it will trip you into a loss, and you can surrender the loss for cash. So a lot of businesses were being set up just for the purpose of putting in fraudulent R&D claims, saying to HMRC, look, we got this loss, can you give us the cash now rather than waiting for the future to set off against future profits? HMRC would give them the cash, and then the company would fold. They would disappear, and then people might try and do it again. So they basically said to counter that, there is going to be a cap on R&D reclaimable credits linked to your pay-as-you-earn liabilities, which HMRC can control, and they do know about PAYE because, of course, it goes in via the RTI, the payroll mechanism, every month. So the HMRC will be able to spot if companies have just been set up for this fraudulent purpose to try and exploit the cash refunds, because they'll know if they haven't, had PAYE going through under RTI. So that's all part of their thought process. That where there's money and refunds and decent tax relief, there is exploitation to be out there, and that's centuries old. So that's it's just how that they tackle that. So the next thing they want to consult on is extending the scope of the qualifying activity. So that's good that they're saying, okay, so normally you'd expect items that would qualify. Well, the main one is often the wage bill, the wage bill of personnel engaged in R&D activity. Could be materials, consumables, or software. They're looking at extending the scope. Other countries do tend to have a wider scope of qualifying activities for R&D, including things like pure mathematics, things like that. So should that be included within the qualifying activities for R&D? The other thing they want to ask about is incentivizing. Should R&D tax relief be targeted at incentivizing certain sectors of the economy and the society? For example, green technology. So should there be some incentives to say, look, maybe there's an enhanced rate for R&D if you are developing green technology? And on the flip side of that, they're saying, should R&D somehow, should they target it to disincentivize certain technologies? So I guess, a real low rate of R&D if you are looking to overcome technical uncertainties in the coal industry. I don't know, but, to try and disincentivize certain sectors. So that's what they're consulting on. Should there be some sort of target, for the greater public good to encourage people to go one way or another down the R&D route? And then another one on the questions that they had was all about the geography of UK. So UK, as we know, very London-centric, very capital-centric compared to many other countries, particularly in Europe. So what about trying to, and a lot of the activity, the R&D activity, does take place in the southeast. So some sort of incentive to encourage R&D activities to take place in the provinces, basically outside of London. Should there be some sort of system that encourages that? Okay, so we'll see what the respondents say on that. And then coming back again to the point of expanding on the qualifying expenditure, qualifying capital items, because often most of the expenditure that goes into the would go into the R&D relief is in the profit and loss account. And what about items on the balance sheet? So plant and machinery, should expenditure on plant and machinery be included in your R&D tax relief claim? So that would certainly benefit many businesses. So again, HMRC consulting on that. And the finally the last one would be I can't read my own writing there. Geographical, again on geography for expenditure that takes place outside of the UK. So the R&D tax rules say that you can. It doesn't matter where you actually spend the activity. You can have staff or subcontractors abroad. That's fine. You don't have to have spent the R&D activity in the UK to reduce your UK corporation tax bill. Now, HMRC says, is that really the right way to go? Because it tends to be that a lot of the expenditure when it is incurred overseas, that does the benefits thereafter really come back on shore to the UK, or is a lot of these benefits of the R&D scientific and technological breakthrough, they stay offshore, and that's not really a policy that HMRC want to encourage. They want as much of this benefit of the technological advancement to stay onshore and help UK PLC. So they're saying, should they maybe change the rules slightly to say that yes, you can still pay for subcontractors to do R&D overseas if you're a UK company, but should it be not as generous as if you'd have paid people in the UK, subcontractors in the UK to do it? So again, they want consultation on that. So quite a few things to think through if you are a stakeholder of some sort in the R&D world. So we'll wait and see. This obviously a few months, and then they'll collect all of the responses to the consultation, and then we'll see what they say. But I think my gut feel tells me that I don't think they'll consolidate the two schemes. I think they will keep them separate. There's so much familiarity now, particularly with the SME scheme. A lot of businesses have benefited from that. I think they will keep them separate, and I think they will expand the scope to include more qualifying costs within there, which is good. I think they may actually go down the route of targeting certain green sectors, encouraging certain types of R&D, and it wouldn't surprise me if there was some sort of territorial cap, like I said, on that final point, with trying to keep the benefits of the breakthroughs back into the UK rather than left overseas. So that's just an overview of the recent R&D tax relief regime consultation. If you like this video, please do subscribe there, and I will see you soon.